My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. So ask anybody in this business, and they'll tell you this week is all important. And for once, I agree with the consensus. Not only do we get earnings from roughly a quarter of the S&P 500, including most of the big names, but we also have the big, bad Fed meeting on Wednesday, the last one until September. And it's hard to buy or sell anything ahead of a rate hike. That explains why today's sedate action, where the Dow closed up 91 points, S&P advanced 0.13%, NASDAQ declined 0.43%, but it was much worse at 1 point. So why is everyone waiting for the Fed, and what does that have to do with your portfolio? They're waiting because it's too binary. Jerome Powell says we're getting a 75 basis point rate hike, and then we'll see what happens, which is what I really want, because we're already seeing signs that inflation's peaking. I'll get to that in a second. Then you might get a rip-snorting rally. On the other hand, if he says we're doing the triple rate hike and then we're willing to keep tightening no matter what, including a possible intermediate hike if the CPI stays hot, then we are definitely going lower. Sell. Now, there'll always be people who carpet how the Fed started tightening too late. I heard a guy today. Come on, he said, let me give you some news. The Fed tightened too late. Wait, well, I mean, yeah, shocker. Even he says he started too late. I think Powell is looking better and better. Housing's rolling over. Steel and aluminum have come down big. We got a steel company on later today. Unprecedented retail glut. More on that in a moment. These are how you beat inflation. The only thing that's stubbornly high is consumer spending, which may be a tough nut to crack, given that American Express just on Friday describes a consumer that's a voracious spender and an unstoppable traveler. If Powell needs to see everyone do badly before he takes his foot off the brakes, then an emergency meeting is on the table, and this will continue to be a bad summer. If he's happy with all the commodities that have come down huge off their highs, then the market could be poised for a tremendous run. Binary, as long as the earnings aren't too bad. And this may be the big problem, because as of this very evening, we found something that was very bad. The largest retailer in this country blew up tonight. Yeah, Walmart pre-announced horrendous numbers because it has way too much inventory. I keep telling you, there's an inventory glut coming in this country. It's here. As I said this morning, it could be a glut-related recession where there's too much of everything. So what do? We get price cuts. Curiously, when the largest retailer in America cuts numbers, that tells you that maybe the Fed's winning its war against inflation. We don't know who else has too much inventory, and they're going to shoot Target. They'll shoot every retailer. That's what they do. But the fact that there are gluts is actually good news for the Fed, and eventually good news for the consumer, as price cuts from Walmart could actually counteract some of the pernicious gasoline and food inflation that they actually mention is the reason why their sales are so bad. But can I also say, and the Child Trust owns it, they've become not great operators. I know that's a harsh judgment, but I'm the king of harsh judgments, which brings me to our game plan. Yes, the game plan for the week, the biggest week of earnings season, make it one of the 4 most important weeks of the year, because the other 3 also have the same companies that report. It all starts tomorrow morning with General Motors. That's a stock that's among the cheapest in the S&P. Well, I worry GM will say that it's been hurt by China's lockdowns. They saw a lot of, they're huge in China, and high raw costs. The company softened the blow from any shortfall by pre-announcing its results at the beginning of the month. But I think this is very much a 2023 stock with lots of solid electric vehicles coming their way. I like cheap stocks. Others like expensive stocks. Not me. You also have GE reporting. I think their alternative energy business is, what, I would say awful, but I am a statesman. And the medical device division has been held back by supply chain problems. Hard to be a bull in GE, yet. Then there's McDonald's, which is beloved by analysts because it almost never misses. I bet it'll be loved again because it's just so easy. It's easy for them. I'm a Wendy's guy myself. Doesn't matter. The standout tomorrow may be Coca-Cola. Now, I think it's got some currency risk, but that's offset by some new alcoholic products that are big enough eventually to move the needle. I've had the Jack and Coke. I've had the Jack and Diet Coke, and I've had the Jack and Zero. And I can tell you that all of them are better than when I try to mix Jack and Coke. Coca-Cola is a great contrast to, say, Walmart, because it's actually in control of its destiny. Oh, by the way, it's also better run. United Parcel could give us a terrific view of logistics. I'm surprised the stock now trades like an ailing mall retailer. It deserves better. It's e-commerce is alive and well. It really is. After the close, we hear from Microsoft and from Alphabet. I think both could be standouts. Microsoft trades off of Azure, the cloud business, and I suspect it's doing very well. Mr. Softy already shrewdly pre-announced a hit from the strong dollar. That's great news. I wouldn't be surprised if they say something negative about the future of the PC business or Europe. But the stock's now down 90 points from its high. If it gets hit again, wow. You know what? I feel compelled to buy some for the Charitable Trust. I want you to join the investing club if you want text messaging alerts to important calls, and it may be that one. Alphabet gives its clients the best return on ads, which are well integrated into their ecosystem and don't rely on much third-party data, which is the no-no. It's stuff that Apple's cracking down on. Tough time for advertising. But in general, well, let's say Alphabet stock, again, fallen from 152 to 107. I think it's a buy because it's fallen so much. But it has been a not-so-hot stock for ages. We also got Chipotle, which way too many people are dumping on, like they've never been there. This is a reliable restaurant chain. It's gotten too cheap. But let's see what McDonald's says in the morning about fast food before making a move. Let's see. Wednesday. What happens? Well, Boeing. Okay, so they've got big orders, right? But can they meet them? Machinist strike possible? No federal go-aheads for the Dreamliner? Suboptimal. After the close, Meta Platforms reports, and I expect a beat and forecast cut from the artist formerly known as Facebook. Once the expectations get low enough, though, for the metaverse, then the stock becomes a solid buy. Then there's Ford. You know what? I bet they talk about how solidly sold out they are. Many of their new models, including the electrics. So the contrast might be GM versus Ford. This is a $13, well, 12 and change stock. People love that. 3% yield, no yield. Today, we got a downgrade of Lam Research, the semiconductor equipment maker that also reports on Wednesday night. But we also expect the CHIPS Act to pass this week. Biden's trying to get that happen. That would be so positive for Lam that if you sold it off that downgrade today, you might want to buy it back at, of course, well, you'll end up buying it back at a higher price. One to kilo on surface now. We had CEO Bill McDermott on last month, and he talked about tougher times in Europe. His stock got hit hard in response. Now we'll find out if that was an overreaction. I don't want to bury the lead, but once again, 2 p.m. Wednesday, Fed announcement. And then for the next hour, we have Fed instant analysis, and then one of the worst orchestrated press conferences every time. I hate it. Jay Powell will either be kind, saying one more big rate hike and wait, or mean, saying multiple additional hikes are coming. It's the difference between a bull market and a bear market, so we have to care. Hey, let's hope Jay sees Walmart. Jay Powell sees Walmart as the start of a glut and not the start of another round of inflation, which is what the Walmart release made it sound like. But then again, remember, Walmart may not know what it's doing right now. Memo to many companies out there, will you please stop reporting this week, particularly on Thursday? I mean, I had to cut this down to just these two companies. There's a stack of companies that are, it's like every one of those European airports. Now, we hear from Apple and Amazon, both are complicated. Apple has huge business in China, which is being hurt by COVID, and Europe, which is being hurt by Russia's insane expansionism. At the same time, Apple's viewed as an island of safety because its products are beloved, and it's got that annuity stream service business. I say, shocker, own it, don't trade it. Hey, by the way, I also want to thank Katie Huberty, who has been just promoted to Director of Research at Morgan Stanley for all her incredible work, especially on Apple. She deserves it. Amazon has real issues, but they're known issues. They overbuilt for COVID, and now they're paying for it. We're going to discuss that with Prologis later. The question is, does everyone know that they overbuilt? Because if they know, then maybe people focus on the positives, like Amazon Ads and Amazon Web Services, which are doing incredibly well. I think the stocks come down, and after the Walmart news, will open very low tomorrow, and that could be a very interesting thing to do. We own it for the trust forever. A Walmart cascade that brings down Amazon's opportunity, okay? I like it. Now, finally, Friday, what do we got? Two huge companies report, and they're unlike compare. Chevron and Procter & Gamble, both investing club names. The bloom vanished from the rose and the oils before their stocks had a chance to truly roar, and they've already given back much of their gains since last earnings season. While I think healthcare and oil and gas are the two best places this week, and I truly believe that Chevron can deliver, the analysts are getting increasingly skeptical. So we sold some for the Charitable Trust today because after today's oil rally, we have too much crude. But I can tell you that Chevron and its doppelganger Exxon, which reports the same day, are going to have good numbers, I think, for many years to come because of short supply of oil and gas. Now, you want skeptics? The analysts are incredibly skeptical of Cramer fave Procter because P&G is viewed as the preeminent weak dollar play in a world where the dollar is insanely strong. If Procter comes in, I treat that as a buying opportunity after reports, though, only because the strong dollar is difficult for Procter, but the strong dollar can peak, and I think is, versus the euro, the bottom line of a complicated game plan. Altogether, it's a brutal week with far too many earnings reports. Disperse ye, companies, before you guys give me a heart attack. Tyler in California. Tyler.
Hey, booyah, Jim. How you doing?
Booyah, right back at you. What's going on?
All right. So this is my fifth time calling. I'm calling so much. My wife's starting to think I like you more than her, bro. Today we're calling about GPS.
Oh, really? Okay. Now, because I like you, you sound like Tyler sounds like a very nice person. So I cannot be as vociferous as I'd like about not buying Gap, particularly tomorrow when Walmart's going to crush everything. So I'm sorry. I'd like to buy the good, not the bad. Jim in Florida. Jim.
Jimmy Chill. This is Jim from Le Chateau in Naples, Florida. My question is on KSS with the franchise group bid now off the table at $60, which thank you for the good advice and not buying things on dial bids. With a dividend north of 6% and a PE of below 5, is this good buy entry point?
Well, I think tomorrow it's going to open. If it opens down below 24 tomorrow off the Walmart news, then yes, I could see buying a little. It wouldn't bum me out too much. I think you might be okay. But 24 bust. In other words, 24 fill or kill, and that's it. All right, it's a brutal week with far too many earnings reports. Witness, right? And yet this is the most important one. Don't forget, Walmart totally kiboshed everybody's night and made me feel miserable. On Mad Money tonight, Prologis has fallen in recent weeks because of concerns surrounding Amazon overbuilding its logistics infrastructure. So I'm going straight to the source of the warehouse logistics REIT to see if we can put these worries to rest. And after falling about 50% from its highs, is it time to take a second look at steelmaker Cleveland Cliffs? I'm getting the latest from the CEO. Then it's been 1 week at our new home at the New York Stock Exchange. So I'm sitting down with the institution's president, getting her take on everything from market volatility to new listings. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.